Do you have a 401k? Do you wish that you could access some of that retirement money today without having to pay taxes or penalties? Well, good, because during today's episode, I'm gonna be talking about some major updates to 401k plans in 2024. And if you stay to the end, I'm gonna be giving you a secret strategy that will allow you to access some of this 401k money today, tax and penalty free. So without further ado, guys, let's get into today's episode. What's up, family? Welcome back to another episode of Tax-Free Living, where I teach entrepreneurs, business owners just like you, how to live tax-free. Now, today we're going to be talking about 401k plans and the major updates that the Secure Act 2.0 has given to our 401k plans. And this goes for both W-2 employees and business owners. So these updates are across the board. Okay, so those of you all that didn't know, our government recently enacted the Secure Act 2.0 in December of 2022, and they did this to address some of the major 401k concerns that we have today. One of the major concerns is 20% of all employed people are not even saving for retirement. That means they haven't contributed anything to their employee-sponsored 401k plan. And then the second concern is the 40% of people that are contributing to retirement plans are way behind in their retirement contributions. So the Secure Act 2.0 has brought more flexibility to 401k plans in hopes of getting more people to start leveraging these plans and getting more people to start contributing to these plans in 2024. And these updates are major. Before we go into that though, hit that subscribe button, because y'all know y'all want more gems from this episode. Y'all know y'all want gems from this show. So hit that subscribe button, hit that like button, and share this episode with a friend. The IRS has changed the contribution limit to 401k plans in 2024. See, in 2023, the maximum that you can contribute to a 401k plan was $22,500. Now in 2024, that number has been increased from 22,500 to 23,000. So you get an extra $500 to contribute to your 401k plan at work or in your business. And on the brighter side of this, you also get an extra $500 matching contribution. So you can contribute an extra $500 per year into your 401k, and your employer can contribute an extra $500 to your 401k plan a year, bringing the total 401k contribution limit for 2024 to $66,000. Okay, so 23,000 of that you can contribute. The remainder your employer can contribute, or if you own a business, you get to contribute the whole $66,000 in 2024. Update number 2, additional penalty-free withdrawal exemptions. Okay, what does that mean? So if you have a 401k plan and you contribute to that plan, and if you try to take money out premature to your retirement age, which is 59 and a half, you have to pay both taxes and penalties on that money. So you could be paying 30% taxes, and you could be paying another 10% penalty, which could bring your total amount received down to 60%. So we want to make sure that if we're going to be taking money from this 401k plan, it needs to be penalty, at least penalty free. The government has came up with these penalty free withdrawal exemptions. So number 1, if you have a personal or family emergency, you are able to withdraw up to $1,000 per year from this 401k plan to put towards your personal or family emergency. So this is a way of them trying to give us a little bit of flexibility in case we run into a scenario where we need to tap into what could be an emergency fund. So I like this provision because it gives us a little flexibility, because previously you couldn't take any money out prematurely to penalties. Now you still have to pay taxes if you take this money out, but at least you avoid that 10% penalty. Okay. Another additional exemption they added is a domestic abuse exemption. So if you are in a relationship and you are facing domestic abuse, the IRS will allow you to to withdraw up to $10,000 from your 401k plan penalty free. Because let's face it, guys, we live in a world today where a lot of people, unfortunately, are going through domestic abuse. And one of the main reasons that they're staying in those abusive relationships is because they can't financially afford to leave. So what the IRS is trying to do here is to give them access to funds that will potentially allow them to leave that toxic relationship. So if you're going through domestic abuse, number one, I'm extremely sorry for what you're going through. But number two, the IRS is going to allow you to take up to $10,000 from your 401k plan or 50% of your 401k balance, whichever is less. So you either get to take $10,000 or 50% of your total balance, whichever is less. You can take that out from your 401k plan penalty free and use that to get out of your situation. Now let's talk about major change number 3, guys. And this is a major change. So for the first time in history, your employer is able to match your student loan payments as if they were retirement plan contributions. Crazy, I know, right? So what this means is, let's say, for example, you contributed $500 to your 401k plan. If your employer has a matching provision, they can match your $500 with their $500, making that total monthly contribution $1,000. But here's the problem that Americans are facing in 2024. Student loan debt is so ridiculous that a lot of employees are having to choose between, do I make a retirement plan contribution or do I pay my student loans off? Right? Because most people can't do both because of how large the average student loan payment is. So the government is noticing this. So they're saying that if you make a payment to your student loan, your employer is eligible to treat that payment as if it was a 401k contribution and match that payment as well. So if you make $1,000 a month payment to your student loan, your employer can match your $1,000 payment, and that way you could pay your loans off twice as fast. So all my people with student loan payments, this is huge news, because this is the first time in history that we've seen your employer being eligible to match your 401k plan contributions. I was talking about number 4. For all of my people that have Roth 401ks, which simply means that the money that you contribute to the 401k is not tax deductible, but that money is gonna grow tax-free forever. Now, so if you have a Roth 401k, the government has instituted these things called RMDs, which is required minimum distributions. Meaning that by age 70, you have to start taking out money from this Roth 401k, even if you don't need the money, right? So the good news is, with this new Secure Act 2.0, they got rid of the RMDs for Roth 401k plan owners. So if you have a Roth 401k, you don't have to take your money out at 70 if you don't need it. You can let it accumulate to the one day that you actually need it. So those are the 4 major 401k updates for 2024. But I do want to let you all in on a secret strategy that will allow you to access majority of your 401k money today, or at least a good part of it. What most people don't realize is that majority of employer-sponsored 401k plans have what's called a loan provision, okay? And what a loan provision means is it's a provision in your 401k plan that will allow you to borrow up to $50,000 from this 401k plan, or 50% of the total balance, whichever is left. So if you have $100,000 in your 401k and you want to use that money to invest in real estate, you want to use that money to start a business, you want to use that money because you have an emergency, you can talk to your HR department and see if your 401k plan has a provision, which most of them do, but people never inquire about. You'll be able to borrow that $50,000 tax-free, number one, and penalty-free, number two. Okay? And the good thing about this is when you borrow from your 401k plan, yes, you have to pay back interest you have to pay the loan back over 5 years, and you have to pay it back with interest. But guess who you're paying interest back to? Yourself, right? So for me, I would rather, if I'm gonna need some money, I would rather borrow from me and pay interest back to myself versus borrowing something from somebody else and paying a 23, 24% interest rate where I could be getting a 6 or 7% interest rate from borrowing against my 401k plan, right? So this is a strategy that most people are unaware of. But now, because you tuned into this channel and because you tuned into this episode, you are now aware of these major updates for 401ks in 2024. So if you liked this episode, if you liked anything that I talked about today, please hit that like button, hit that subscribe button, and make sure you tune in to the next episode. All right, guys, I'll see you next time. Peace out.